Hey everybody, Chuck Barone, Thursday, February the 23rd, 2023. Big day today, guys. It's the one we've been waiting for. Big news to report. But as always, we want to welcome you guys to the show. Thank you for your support. Let you know how much we appreciate all you guys do watching the videos, your likes, your shares, your comments and questions. And we just really appreciate you guys. Thank you. Markets today, well, what a wild day in the stock market, man. Whipsaw day. Literally a 500-point swing as it goes up to 33,000 and change, 200. Whipsawing back down 33,300 down to 32,800, a 500-point drop. Then rallying back, ending the day positive today. Just a wild day on the market. Dow ending up gaining 108 points from down a couple hundreds. S&P gaining 21 points. The NASDAQ plus 83, so the market's ending up in positive territory. I haven't seen any breath of anything like gainers and losers for the day, but what a wild one on Wall Street today for the stock market. And of course, that was all in reaction to the data we're going to talk about real quick. Bond market today, yields falling, surprisingly. The 10-year dropping 4 basis points at 388. The 2-year drop basically sitting unchanged at 4.70. 82-point inversion, not good. Not a good sign coming for the economy. The dollar up very small, 104.56 on the index, still holding its own. The dollar. Metals today, well, with the dollar being strong, metals are typically not going to be. Gold down $3.70 at 1,823 per ounce. Silver down 14 cents, $21.34. Metals are hanging in there. I mean, they were really rallying. Now we're giving it back. But I think that gold and silver are really a play coming up. This dollar's not going to stay up forever. Inflation, gold and silver are the big inflation hedges and always have been. There should be more demand than there is right now. I don't know if we got, the same old suppressing the prices, because they sure were looking like they were running up pretty strongly. Anyway, still hanging in there, holding their own, and I believe a rally imminently. Oil today rallies, up $1.61 for a barrel of West Texas Intermediate, settling at $75.56 per barrel. Well, that's a little bit of oil has been kind of in a series of troughs. So the original trough was between $80 and 85 cents. It was basically in there, just staying there. Then it broke out to the upside on, OPEC crap and Biden's trip and all kind of stuff. Then it crashed back down into low 70s, rallied back up. Well, now its trough is more in the 75 to 80 range. And it's been there. It broke down underneath, and it looked like it was going to establish a new trough between 70 and 75. But breaking back above that today, we'll watch it closely to see. I'd like to see these oil prices. I think that it's not a terrible price for a barrel of oil, but I'd like to see them come down a little bit just because I want to pay less for gas. And Bitcoin today, to wrap it up 125 bucks, 23,956, getting a little resistance at that 24,000 number. Bitcoin holding its own, man, in the face of some very, very, very negative news on cryptos. I don't know how, it's really not easy, I guess, as easy as it is to find data on stocks as it is on Bitcoin. So I don't really know, if they're really selling or trading any real volume on Bitcoin every day, what it takes to move Bitcoin up or down. But the price is holding up. It crashed all the way down to 16,000. It looked like they were done. Now they're kind of hanging back in there. Let's see where it goes. Data today. Well, we knew today was the big day. We knew we were going to get GDP. We knew we were going to get jobs. Jobs, guys. That's the story today. Going crazy. Just still a super tight labor market. Claims coming in at 192. Expected 200K. So coming in... So less than 200,000 is a low number. To come in below that really shows us that the job market remaining super strong. This is the Fed's big enemy. They want that jobs to cool off a little bit, to help push down wage gains, which have been going crazy and are a big driver of this inflation. We've talked about the wage price spiral and how that affects prices. So this number lending more support to the idea of the Fed raising rates higher than they've been saying and keeping them higher for longer. Well, this is, we'll see. I think, I don't know how the Fed, right now the Fed can be strong because the economy appears to be strong. However, if the economy weakens and we're in a recession and things are really going bad and it's an election year or moving toward an election year, let's see if the Fed's got the stones to stay with it. GDP today. Well, GDP for the fourth quarter coming in at GDP coming in fourth quarter 2.7%. A great number for GDP. Actually, they were expecting 2.9. That's what the Fed or the GDP Now Atlanta Fed tracker said, but 2.7. So the last two quarters we had plus 3.2, plus 2.7, giving the GDP a positive growth for the year, guys. And the first quarter of this year, if you look at the GDP Now tracker showing first quarter GDP growth expected to be about 2.5%, these are good numbers for the economy, very good numbers. 2%, I guess, is kind of like the Mendoza line for economic growth. So seeing these numbers, again, lends more support that the economy is handling these rate increases and continuing to do okay. Now, this is some interesting stuff, guys. I was reading this Harris poll today. It's all about consumers and how they're feeling. We know we're going to get some big consumer numbers tomorrow. Harris poll showed 87% of the people responding are concerned about the economy, concerned about inflation. When I say concerned, that means worried and believe things are bad. 50% of the people polled said their personal financial situation has gotten worse over the past 6 months. That is not good because they're still spending. So if their economic situation is getting worse and they're still spending, that tells me they're borrowing to spend, and that typically does not end well, right? 80% of the poll said that there is a recession coming, and 46% of the people polled said they're afraid they could lose their job. Almost half the people working feel like they could lose their job in a recession. That is not the strongest job security thing or signal there is it? Obviously, consumers feeling very, very negatively about the economy, even though the data showing that the economy is still going okay. But when you're dealing with price inflation and you're dealing with prices going up, you're dealing with having to make some cuts on certain things, making certain decisions. Should I buy this? Shouldn't I? Should I buy this or should I buy this? The money only goes so far. The cost of things goes up. People are obviously saving less money because just to buy the same stuff costs way more. So it's just a bummer because typically sentiment finally is an indicator of what's coming. Consumers feeling super negative, well, that tells me that their behaviors are going to change, right? If you're really afraid you're going to lose your job, are you going to go out and buy a new car? If you're afraid you're going to lose your job, are you going to take out a home loan? If you believe a recession is coming, are you going to spend money right now or save it? The crazy thing is 80% believe a recession's coming, half believe could lose their job, and nobody's saving any money. It's crazy. The Cleveland Fed, the economists at the Fed in Cleveland, ran a model to see what the economy would look like, what it would take to get back to the 2% inflation target that the Fed has been talking about and has been their target for a long time, and they were making it easily for a long time. Not anymore. And getting it back there, according to this model by the Cleveland Fed, it is not good news, man. They said, this model shows that inflation, to get back to 2000, to get back to 2%, inflation would need to be above 7% through 2025. Oh man, that's not good. They believe that inflation, no matter what the Fed does, even if they stay on these rate hikes and keep rates higher, that the number will exceed 2% in 2025, at the end of 2025. We would need 7.4% unemployment and a very deep, painful recession to get even back close to 2%. We wouldn't even hit the target with those numbers. Leads me to believe that the Fed is likely to move the goalposts rather than crater our economy and with it the world economy probably. So we're going to hear the 2% target is not really compatible with the world we're living in anymore, and really it should be higher, and you're going to start hearing all kind of Fed bullshit about why inflation, higher inflation, a little bit higher is okay. When people said 2% was good, everybody freaked out. Now they're going to make it whatever it needs to be to kind of talk about getting the job done, right? And one last thing before we go. Tomorrow, guys, we know we're going to get consumer spending, we're going to get income numbers, but we're going to get this P.C.E. tomorrow, this personal consumer expenditures number. This is the one the Fed goes by as far as their gauge of the economy and inflation. They don't really care for the CPI so much. But what I'm hearing is that we might get a surprise tomorrow to the upside on this P.C.E. number. So rather than the continued down we've been getting with inflation numbers, we may get a shocker tomorrow with this P.C.E. showing inflation rising. So we'll be here to talk about that tomorrow and all the rest. Fascinating day today, guys, especially watching the stock market all day was bananas. Tomorrow's going to be another one. We'll see if we get the shocker. We'll see what consumers are doing and how they're hanging in there. We'll be here to give you guys all the details. Again, we appreciate your support. Thank you for watching the videos and supporting the show. Back tomorrow to give you guys the scoop. Till then, take care. Thanks.